Hey now, I'm back with another trading review. This time, we are going to examine and test the highest profit strategy from the TradePro channel to see if we can get the same results. And be sure to stick around to the end where I show you how we can make this even better. Just go ahead and crash into that subscribe button like you are driving this boat. This is the highest profiting system that has been tested on the TradePro channel, and like most trading systems, it can be adapted to Forex, crypto, option stocks, indices, or any instrument that has significant volume and market participants. This trading strategy uses 3 free TradingView indicators. The first indicator is the Moving Average Convergence Divergence, or MACD. I'm going to keep the inputs and style at default settings. The MACD will provide us with our setup and trigger signals. The second indicator is the Multi-Timeframe Exponential Moving Average. TradingView recently added the ability to change the time frame of their built-in EMA study. The indicator's time frame should be set to 15 minutes and the length to 50. I'm going to color this in orange. This study will provide us with higher time frame trend confirmation. The third and final indicator is another multi-time frame exponential moving average. This EMA should be set to the time frame of 1 hour and a length of 50. We are going to color it in white. The second EMA will be used for higher time frame confirmation as well. Let's go over entry criteria and review some examples. This chart is Aussie versus the Yen 5-minute candles. The rules to enter along on the TradePro's highest profiting system are: first, we need the 15-minute EMA in orange to be over the 60-minute EMA in white. The second thing we are looking for is bullish divergence on the MACD, so a lower low on price and a higher low on the MACD. Third, the MACD line must be below the zero line for the entire time that the two lows create the divergence. 4, the MACD histogram must have a gap in color where the price is divergent. We want to see 2 red peaks with a green peak in the middle. And finally, we enter on the cross up of the MACD. All of that happens on this candle here. This is our trigger candle. We place our stop 2 pips below the previous swing low and target 2 to 1, and this one hits 2 to 1. If you enjoy this content, make sure you click that like button. We have one more long example. The 15-minute EMA is over the 60-minute EMA. We have bullish divergence on the MACD. The MACD line does not touch the zero line. There is a gap in the histogram. We get a cross up of the MACD line. This is our trigger candle. We place our stop 2 pips below the previous swing low and target 2 to 1, and this one hits our target of 2 to 1. And now we flip to shorts. This is what I will test for shorts. First, the 15-minute EMA in orange must be below the 60 EMA in white. Second, we are looking for bearish divergence on the MACD, so a higher high on the price and a lower low on the MACD. Third, the MACD histogram must have a gap in color where the price is divergent. We want to see 2 green peaks with a red peak in the middle. Our entry signal is a cross down of the MACD. Everything converges on this candle here. This is our trigger. We place our stop 2 pips above the previous swing high and target 2 to 1, and this one hits our target of 2 to 1. I'm going to show you one more quick short example. The 15-minute EMA is under the hour EMA. We have bearish divergence on the MACD. The MACD line does not touch the zero line between the divergent peaks. There is a gap in the histogram. And finally, we get a cross down of the MACD. We place our stop 2 pips above the previous swing high and target 2 to 1, and this one hits our target. I'm going to give you some ideas on how we can make this system better along with the Trader's Landing score, and now it's time to do what I do. If you enjoy this content, please hit that like button. Remember, this is just 100 tests on 3 instruments. If you are thinking of using this system, please do all the required testing and be sure to let our community know what you discover. It took almost 9 months and 3 pairs to find the 100 trades on the 5-minute chart. I chose all yen pairs for this test, and I will explain why shortly. Using a 2 to 1 risk-reward ratio, we had a 51% winning rate and a 53% gain on account if all of the setups were taken, risking 1% per entry. Most wins in a row was 8, and most losses turned out to be 6 in a row. The equity curve here is good. There is a very impulsive move up, followed by a brief consolidation, and then another choppier impulsive move up, followed by a brief drawdown and another move up. This gives me the opportunity to show you why this is from a higher time frame perspective. Look at this 12-hour chart of the same time period tested on the Aussie yen. You see it starts with that impulsive move up, then a small consolidation, followed by a more chippier move up. Then after consolidation, we get a trend down. You can see on this chart when the market trends either up or down, it has a positive effect on the equity curve, and where it gets choppy, you can see the gains get choppy too. What score would you give this strategy? Let me know in the comments below. I give this system a Trader's Landing score of 6 because while it did perform well during the test on the yen pairs, I have something to share with you. Remember, the enemy of great is good. I have 3 ideas on how we can improve this system. First, I did test this out initially on Euro USD and it did awful. I decided to use the yen pairs because of their movement correlation to equities, thinking it may do better, and I was right. So just make sure you do even extra testing with this system. The second suggestion is subjective, but divergence is subjective regardless, so I'm going to add it anyway. After you see a huge impulsive move up, a lot of the time there is a consolidation. This is not a time to take a setup. You should wait until the trend continues by creating a new high or a new trend is formed with a break of resistance. The third suggestion is to change the stop loss level. Look at this setup. If the stop was placed 3 times the ATR at the bottom of the swing low, it would have been a winner. And another one here. I saw this a lot during testing, and this could really increase the overall win rate. This one is also at 3 times the ATR, and on these yen pairs, that number seems to be a sweet spot. Check out this playlist for more profitable systems, and have a great day if you want to.